so I'm just gonna run through a trade that I have missed, and I'll use this opportunity to also go through the things I'm usually looking for whenever I am trading. So let's put this here because I know the trade was on that day. We'll take it from the monthly. We'll just go very quickly from the monthly. So on the monthly time frame, we see a very nice formation that's going on in the monthly time frame. But we're not really interested in what's going on here. We're more interested in what's going on here. I have my fair value gap that is here, could possibly draw into in the future if it starts going. If everything starts to not make sense, we're most likely draw into a monthly time frame. Always remember that price always draws to inefficiencies and fair value gaps and other blocks and liquidity. Right? Price will always prioritize a fair value gap. It's always prioritizes an inefficiency, all right, over a liquidity. All right, on my weekly time frame, I don't think I need this. Let's frame it well. So my weekly time frame, I have price was going down, price has broken through. Now we're in a bullish cycle now on the weekly. On the weekly time frame, we're in a bull run now. We're in a bull run now. And we have we have price coming up here to take out this gap. This gap is no longer necessary, so I think I can clean it out. One of the things I want to start doing is just cleaning out stuff that are no longer relevant. All right, so we come here, we have weekly buy side here, sell side liquidity here, sell side liquidity here. This is out. We have the mean threshold of our order block. Price came up here, took this out, came down, hits the order block and rejected. So on the weekly time frame, I'm expecting a bull run because of this rejection of the order block, which means that we are probably continuing to we are going probably continuing bullish, most likely to take out this inefficiency. We have this is not an order block. I within the week I kept thinking that there's an order block, but this is not an order block. This right here before it goes down is not an order block because we are buying, not selling. So this is not an order block. So we are not even looking at any other block here on the weekly, all right? But we have our liquidity. We have our liquidity here, and we have the consequent encroachment of the wick here, all right? So I'm looking at it taking these two out, and then maybe I might go for the imbalance. As to whether this will happen this week or next week, I'm not too sure. From the way I'm reading the candles, I do not think it will happen this week. I'm gauging for maybe next week or next 2 weeks. On the daily, uh whereas we have bullish prices on the daily, this the on the weekly, this the daily tells a bit of a different story because we had we had price push up here and then price began to drop here. Let me try and clean out some of these ones that I no longer need because it just makes the charts look messy. Yeah, mean threshold has already been taken, so we no longer need this. No longer in that particular. Okay, maybe I'll clean it out later. So we have this. We push up. So we have this right from here in this PD array. All right, we move this way in the bullish cell. bullish buy. Sorry, we're in the buy cycle. We come here. This candle right here marks our highest high. So there's our low. We have our market structure shifts right over here. Now we enter a sell module. But now we have our lowest high here. We have our lowest low here. We have our previous high for the low here. We break this and now we are back into selling. Now we have this weekly fair value gap that it comes to test it. This is what caused the weekly fair value. So it tested it here, here, and then we continued buying. All right. So I'm generally bullish on the daily as well, which is very good because when you're bullish on the weekly and you're bullish on the daily, that gives you like extra points. Like you know what you're doing is good. You're doing something right. Right. So I have that here. So I'm generally bullish, or I was generally bullish. And then we come to the 4 hour. So on the 4 hour, prior to that, prior to that move, I only had this fair value gap here. That price I started digging into already. I have a fair value gap here that has not been taken yet. So we could see price enter and mitigate that 4 hour fair value gap. We could see price enter and mitigate it because price entered here, but I didn't fully mitigate it. So that's still an opportunity. Down to the 1 hour, we see multiple fair value gaps formed in here. One of the things I've noticed is that whenever you have a 4 hour and a 1 hour fair value gap overlay on each other, oh my goodness, usually a price will just tap into one of those and enter. So price could have either tapped into here and then pushed up, or price could tap into here and push up. But given the time that price tapped into this, the probability of it pushing up is low because you can see here that it's tapped into it at between like 5, 6, 1 o'clock. So this is not looking probable, but this is because now we are tapping into this around 2 a.m. Remember, it's time and price, right? So even though I would have loved for it to touch this and move, there's no assurance because of price, because of time, right? So that's what I'm looking. I'm looking at price pushing here and moving up, and that's exactly what played out as you'll see soon. So we have price on my 15 minutes. Now all we are looking for here is the day starts and we are looking for three things or two things. We're looking to draw out our Asian range, which is what we have right here, and I'm looking for price. Since we are trying to buy, I'm looking for my Asian ranges here. It's right here till midnight. Anything that takes us out at the low is fine with me because now I'm looking to buy. So anything that takes us out, I'm assuming that's a Judas swing, right? To take out buy side, sell side liquidity to then start buying, right? So this takes it out. This we keep going, we keep going. Now we are at our time now. Now that it takes it out, I want to draw my break of market structure. At which point do I consider market structure broken? I can see how price has moved swiftly down. So now I know this right here is my high. If price breaks through this and closes above this, it doesn't just have to break through it with a wick. I want to see it break through with a solid candle close. Then I begin to look for my fair value gap. I can only draw my Judas swing after it has broken because until it breaks, I don't know that is yet my Judas swing. All right, so then we have price do this, breaks through, but now see what it does. It breaks through it and comes back down. That's not very solid. So if I want more clarification, I might have to move this up a bit, either to here or to here, because I don't like how price broke through this. The higher you go, the more the more assurance. I don't want to use the word assurance because assurance is not exactly right. But anyways, I don't like this because it broke through it, and usually I'll wait for the next candle, and in the very next candle it comes back into the structure. That is not that does not make me comfortable. So I wouldn't want to take this. When we see price do this. Now, I will not want to use this one over here. Reason being that it is still within that wick that has come. So it doesn't show me a solid break. Do you understand? Because of the wick here. But if I put it around here, now that gives me like a solid break. Like there's nothing, there was no order flow inside here before the break. And then we see how price rapidly moves inside here. So now we have that break. We have that break now, but the fair value gap was formed in between. I don't think that's what I saw though. So we move because I wouldn't want to take this trade. So let's see what happens then. Oh, you see that? So now what price does is because I wouldn't want to take this trade because the fair value gap in between, like in between the New York kill zone and the London kill zone, is not safe for me at all. All right, so we have this comes to take this out. Now we have a break of structure either here or here because of how this formed. Because it didn't just go straight down, so we have a new leg being formed here. So we'll be looking at this for our break of structure. And this is why I said until the break of structure happens, you can't tell what your Judas swing is. And we have price to do this. Boom. And we take it out right here. Now let's see what happens in the next candle because that's what's important for us. Boom. Okay. Now we, we have this here. Very strong. So now this now becomes a Judas swing. Literally tapped into one pip difference, and that's where I was wrong. One pip difference. Look at the low 09665 and look at the low here 09666. So this dropped just a pip below that. In fact, less than a pip below that, less than a pip below that, and then it moved. And then we keep going. Stops and targets uh, flip. My target one was here. Target one was here. Target two was here. Target three was here. So I was breaking this into three places because I wasn't sure if I was going to go all the way to the volume imbalance here. So I was taking it all the way here. So I had three places to take my TP, uh, showing how it moved. Now, as it's hit here now, this is my first TP. So I'm supposed to move my stop to 50%. So my stop moves from here to 19. I'm at 19 now, so it should go somewhere around 10 points. So my stop should move from here to there, right? At that point, like when it hits 50% of this level, that's somewhere around here, somewhere around here, right? Then by the time it gets here, I'm at break even already. So I'm in a no risk move now, and let's see how it goes. I have my first TP taking, and I'm good now because what I usually do is I know Asian range has a tendency to come down, so you leave like very good space for all of those things. So now I'll be holding it here, hoping that it shouldn't come down because this is quite low. I was holding it here hoping that it shouldn't come down and then it should continue. Okay, but now we see that price came down, take this out, and then we continue moving. Yeah, I wouldn't want to be break even there either. So 0.73. So we have 0.73. And that's what I was seeing for today actually. So we have it being taken out at, if I was breaking it into three, I was gonna have 0.2 hour, 0.2 hour, that's 0.3 hour, 0.3 hour of my rate. So that would be times 2.5. Anyway, so but that's it. That's literally it. So that explains it.